Good day, fellow investors. My name is Sven Karlin and welcome to the first stock market weekly recap with an orientation to the long term. I'm not going to talk about just what happened this minute. I'm going to check what is going on and how that affects your long-term returns. That's what matters. I'll talk about three things today: the Fed raising interest rates, Amazon taking over Whole Foods, and valuations. So let's start with the Fed raising interest rates by 0.25 percentage points. I would expect that when the Fed raises interest rates and tells the market that it will raise interest rates again, with the commentary that if the economy stays on course, other interest yields would rise. However, that didn't happen, and we can see here that the 10-year Treasury yield has been declining for the past 7-8 months. This means that the market isn't that convinced that the Fed will be able to increase yields much higher. Car sales are dropping, so if the Fed pushes too hard, increases interest rates too much, it can have a very negative effect on the economy. That's something to be watched and prepared. Hedges are always a good thing to have, especially if a recession comes and the Fed is forced to lower interest rates and make new quantitative easing rounds. So be prepared. The second thing I want to talk about is Amazon buying Whole Foods. Amazon entering into the groceries, and there will be the whole weekend you will listen about speculation, what is Amazon doing and why. My point is, and the question, how many of these can you eat? Why do I ask that question? Because you can eat one, your family can eat one or half of it for one day or a lunch or something. However, if you can buy it only in one place, the seller will put a healthy margin on it so that you're happy, he's happy, everybody makes money. But if you can buy this in 20 different places from 20 different suppliers, they will enter in a price war. Kroger just said that they will lower their prices in order to retain customers. If everybody lowers prices, these things get cheaper and nobody makes money, not even Amazon. So if you're attracted by the bargains that will be into the grocery, into the retail environment, please be very, very careful. Many of those will be value traps because they are entering into margin wars and their profits will be competed away, especially now with Amazon entering the field. Many others will enter the field of online grocery delivery, so margins will be questionable. We had the same thing going on 17 years ago with the dot-com bubble, so be careful out there. My third message are valuations. In the past 7 years, the S&P 500 price-earnings ratio has been going only up. As you can see here, it went from 14 to the current 25.69, almost 26. So it almost doubled. This means that earnings grew a little bit, but stock prices grew at an exaggerated rate. It means that those who are buying stocks now are paying much more for the same than those who bought stocks 5 years ago. And this is a dangerous situation. If we take a look at the CAPE ratio, the cyclically adjusted price-earnings ratio that takes into consideration average 10-year earnings, we can see that it is at a very high level, at a level that is almost equal as in 1929, which is again a very dangerous thing. Why am I saying that it's a dangerous thing? Well, because the higher the price-earnings ratio, the lower are your investing returns. That's simply history and is simply true. The market is a voting machine in the short term and the weighing machine in the long term. I'll show you the final chart of today, and you can see how the higher the price-earnings ratio, the lower are returns. So be careful out there. Diversify, but smartly, so that you are hedged for everything. Interest rates going up, interest rates going down, economy going up, economy entering into recession, global crisis, just US crisis. Be prepared. I'll do my best to share as much knowledge in future videos on how to be prepared, to give good stock picks, and to help you achieve high returns with low risks. If you like the content, please consider subscribing, leave your comments below, and I'll see you in the next video. Thank you for watching and have a great day.